Well, welcome everybody, and thank you for this opportunity to present my company. This is actually our first presentation, our first public presentation following Manuka's shareholder approval for the acquisition of the STB, the South Taranaki Bight project. And that only took place less than a week ago, and I've really been looking forward to this opportunity. So let's get going, let's get into it. Manuka Resources, we now straddle two geographical regions, obviously Australia, where we have our Cobar Basin assets. We've got an active gold and an active silver project. Our gold is at Wanawinta, and our silver project, our gold project is at Mount Boppy. Our silver project is at Wanawinta, and we have exceptional exploration and infrastructure in the Cobar Basin. And now we have as well in New Zealand a world-class tier 1 project. It's an offshore vanadium titaniferous iron sands project on the North Island, west coast of the North Island of New Zealand. So a quick corporate summary. Post-acquisition, we'll have 466 million shares on issue, and our market cap is in Aussie dollars is $75 million, so around about 50 million US or euros, and which we believe is very cheap, especially now that we're adding a project of this quality to our stable. Very quickly, our board of directors and management come with a lot of experience. I'm very pleased to add that Alan Eggers and John Seton will both be joining our board. They are the current management of the South Taranaki Bight of Trans-Tasman Resources, the owners of the South Taranaki Bight project. And they're going to be joining us from beginning of November, at which stage we expect the New Zealand authorities change of control approval. Important to note that the management team has a combined shareholding in Manuka Resources, which exceeds 40%. So we have a lot of skin in the game. We have a lot of interest in making sure this project really excels. Let's start with our Cobar Basin projects. We've got the Wanawinta Silver project, which is 100% owned, and it is now producing. We commenced production 31st of March of this year, and we're now Australia's largest primary silver producer. We've got a total resource, which is 51 million ounces of silver. As well as that, we have 207,000 ounces of lead, which we don't include in the resource. We're just focusing on the silver at this point. And as well, we have 515,000 ton stockpile, which grades 70 grams per ton, and no mining cost required. And that is what we're currently processing at this point. We've got a very valuable asset. We've got a 850,000 ton per annum plant, mine camp, all necessary infrastructure, and that saves 5 or 6 years of permitting approvals in New South Wales. And then very excitingly, we found Cobar style, typical Cobar style lead, zinc, silver, which is a little bit deeper down at our Wanawinta Deeps projects. We had an exploration campaign which got announced last year in June, July last year, and we will be continuing the exploration early next year. Mount Boppy Gold Project, this is now paused because we've completed our phase 1 production. We completed that in March of this year. It's an open pit mine. I've got a picture of that to follow. Previously, it's produced over 500,000 ounces of gold, and at 15 grams per ton, one of the richest gold mines in Australia. 15 grams per ton equates to half an ounce per ton of gold. So that's been fantastic. There's a 42-person mine camp, power, water, again, fully permitted. And we're currently waiting our mine plan, which will reconfirm commencement of operations at Q1, Q2 2023. We announced an updated mineral resource of 45,000 ounces of gold for the next phase of mining at close to 5 grams per ton, 4.95 grams per ton. And we expect this to grow as we start commencing further exploration. Excuse me. Our recent acquisition, which really is a world-class asset, the world-class South Taranaki Bight vanadium titanomagnetite project. As I mentioned, on 21st of September, the Manuka shareholders voted overwhelmingly in favor of management's recommendation to purchase this asset. We are awaiting final NZ authority consent. That's expected late October, early November. It's more of a formality than anything further. It's procedural. The key features of this acquisition are as follows. It's a world-class tier 1, 3.8 billion ton JORC resource. And it's got the potential to become a key player in green, green energy economy. And its expected annual vanadium production will be between 12 and 15% of global production. This is very important. 12 to 15% of global production, and it's got the potential to generate substantial profits within just 3 years. So besides the benefits of vanadium, it's targeted to be the lowest carbon emitter for all our FE producers. We'll be producing per ton of ore, carbon dioxide will be 62 kilograms per ton of ore, whereas all our competitors are between 125 to 250 kilograms per ton. It's the lowest cost quartile as well, in the $20 to $23 per ton. And this excludes any credits from vanadium or titanium. This is just FE costs that, we get vanadium and titanium for free. It's located within New Zealand's exclusive economic zone. And they've set this up targeting gas, oil, and mining. There are already 3 operating gas and oil platforms in the EEZ. We will be the first mining company to get going. We expect our final EPA approval very early next year. To date, the previous owners have invested over $50 million US, and they received the mining license in 2014 for 5 million ton per annum production, and that'll extend for 20 years. They were granted their initial EPA environmental approval consents, which to operate in 2017. And as I've mentioned, final approval process is nearing completion now. And the New Zealand government has focused on implementing a mining code. They're very keen for this to become a mining region, and is subject to ensuring appropriate environmental safeguards are maintained. So vanadium fact sheet, and I really want to harp on this for a little bit, because vanadium is a critical mineral. It's deemed a critical mineral in the USA, in the EU, and in Australia. And historically, it was used for steel strengthening. 1 kilogram of vanadium doubles the tensile strength of steel. So it had very strong military and aeronautical applications. But most recently, vanadium is now getting a second lease, well, an additional lease of life, because it's used in vanadium flow batteries, which is now the utility or grid storage medium of choice. So that's gaining similar status in grid storage to what lithium holds in mobility storage. Annual production of vanadium as vanadium pentoxide is only 115,000 tons per year. Historical growth has been pretty steady at 3% per annum, and that's now expected to explode. The demand predictions are to double over the next 5 years. Producer regions is interesting. China produces 55%, Russia produces 20%, Brazil 15%, South Africa 10%. And that's why it's deemed a critical mineral in the USA, EU, and Australia. I guess they're looking for stable regions for production. New Zealand has the potential to become the 3rd largest producer through this project. We'll be producing more than 20,000 tons per annum, which equates to 55 million pounds of vanadium, again, per annum in concentrate, 15% of global production. So why is vanadium so good for grid storage or utility storage? Firstly, it's non-flammable. Lithium batteries, there's 14 known fires to date in their large-scale lithium-ion battery storage systems, and they release complex range of gases when it comes to extinguishing those. Vanadium has 78% less emissions than lithium ion in the manufacturing process. Lithium recycling is a problem in Australia. CSIRO has noted that the battery waste is growing at 20%, whereas 100% of the vanadium electrolyte is reusable at end of life. It's got a 20-year long life battery, and it can be scaled. Lithium, on the other hand, expectations are 8 to 10-year lifespan. Let's go back to Australia and our Cobar Basin for a second. So the Cobar Basin is one of Australia's best known mining provinces, and it's just 600 kilometers northwest, central west of Sydney. You can see Sydney just over there, and our two projects are 600 kilometers central to the central west. You can see the basin has some well-known international leading players. Glencore, Toho Zinc had the Endeavour mine for a long time, and then we've got some very strong mining licenses and exploration tenements. The appeal to us for the Cobar Basin is it's a very deep basin. The CSA copper mine, which is owned by Glencore, is over 2 kilometers deep. The Peak mine, gold mine, which is owned by Aurelia, is 1 kilometer deep. The Endeavour mine, which is now on care and maintenance, is over 1 kilometer deep. Our silver oxide project at Wannawinta is just 60 meters deep. This is in a basin that is an exceptionally deep basin. We're just 60 meters deep. And in February last year, we started our proof of concept drilling program, and that showed that there is a potential for a very successful lead zinc silver project just beneath our existing mining license in the existing pits. And we had evidence of mineralization extending over 3 kilometers. That's something that we will focus on early next year. This is the project, the silver project. You can see the plant, which is an 850,000 ton per annum plant. And the bottom right-hand side of the screen, that is a good picture of the stockpiles, which we are currently processing at the moment. And they will that processing will continue into early 2023. The Mount Boppy silver mine, again, very shallow when I compare it to the rest of the Cobar Basin, just 120 meters deep. If you look at this 3D model over here, the blue area is the base of our most recent mine plan, the pit design. And the historical miners who mined this between 1895 and 1925, they went down more than double. These are their shafts. These gray areas are their shafts and their tunnels. They went down to more than double. Our mineralized zone, we know, extends down to, we're at 120 meters at the moment, the current depth of the pit. We know that'll extends down to 240, 250 meters. And this is all very high grade. The red area shows grades of over 5 grams per ton. To date, we projected that we made projections in 2020 when we started mining this in April 2020 that we'd only produce 22 to 24,000 ounces of gold. That was well exceeded. We produced over 41,000 in phase 1. And again, there's still 45,000 ounces remaining at 4.95 grams per ton. The South Taranaki Bight, let's jump across to this again. This is the economic zone. This is the 12 nautical mile boundary that surrounds New Zealand. And then the blue area here, that's our mining license that was granted in 2014, which sits in the exclusive economic zone that New Zealand holds. Their zone is more than double the size of the landmass of New Zealand, actually. The proposed features, as mentioned, we have the potential to recover over 5 million tons of iron ore plus vanadium and titanium for 20-year mine life. Global seaborne market for iron ore exceeds 1 billion tons per annum. So 5 million tons is material, but not going to have any impact on global supply. We will be the lowest quartile carbon dioxide emitter of all iron ore producers. We'll have vanadium at 0.5% vanadium, which equates to 55 million pounds per year. And as mentioned, we will be one of the lowest cost quartile Fe producers. Their achievements to date, I've mentioned already, but I do want to harp back to it, that they have spent more than $50 million to date. They started this company in 2007. They completed their PFS. This is the previous owner's TTR. We are buying the whole company, and their management will be joining our team. They completed their PFS, their pre-feasibility study, in 2013. Their mining license was granted 2014. They completed a 3.8 billion ton JORC resource since 2015. They received the EPA environmental consent to operate, their initial consent to operate, in 2017. They had to deal with some court challenges because they're going to be the first company in New Zealand to mine from the South Taranaki Bight. And you know, the Supreme Court awarded in their favor in 2021, and most recently the High Court has again reaffirmed that in 2022. And I stress, this is a black desert beneath the sea. There's no kelp forest, there's no coral, there's no fisheries. It's literally a black desert beneath the sea. We purchased this project, when I say today, a week ago. We got shareholder approval, and now we're just waiting on New Zealand authorities' change of control consent. So what are the environmental advantages of the South Taranaki Bight project? It's a very, very low carbon emissions compared to all other hard rock deposits, because there's no heavy machinery mining fleets, there's no open pits, there are no waste dumps, there are no haul roads, there's no grinding circuits, there's no drill and blast activities, there's no rail or port, there's no impact on fish, whales or dolphins, there's no legacy issue with rehabilitation, part of our recovery process. This is, you know, it really is quite a unique project, and I'll show you how we're going to do this going forward. Let's just move on. So this is important. This is our concentrate grade that we will be producing, 0.5% vanadium when expressed as vanadium pentoxide, 8.5% titanium dioxide, which is also a highly sought after and specialty metal, and 56 to 57% range iron ore. We have a single vessel, an integrated mining vessel, which is it's basically the same size as a Cape-size vessel, length of 335 meters and a breadth of 60 meters across. And this technology is not new. It's been adopted and developed by De Beers Marine. They've been mining in South Africa, off the west coast of Southern Africa, for the past 40 years. We have a mining arrangement, a contract mining arrangement already with them for the first 2 years of production, and they're very keen for us to extend this. It's a tried and tested recovery solution, and we've got a fantastic YouTube, which you'll find in there's a hyperlink attached to that. There's a fantastic YouTube which shows it's simply a vacuum cleaner which is connected by that pipe, which runs along the floor of the ocean. Perhaps this is my favorite slide of all of them, Matthias. This slide shows our summary of estimated costs, and our total cost on a per ton basis is US dollars $20.41. So we say a range of 20 to 23 per ton. Please bear in mind that the iron ore content alone is $89 per ton. The vanadium content per ton of concentrate on current spot prices, and spot prices are not the price that you'd contract at. The spot prices are actually well less than that for vanadium at the moment. But the vanadium spot price equates to $82 per ton of ore, and titanium content, I'm not saying we're going to get all that back as a payable, but the titanium content is $270 per ton. This is all based on a cost of 20 to 23 US dollars per ton. We will have between $150 and $200 revenue per ton of ore. Our milestones, they've now merged, or the shareholder approval process has been completed. We expect the EPA consents to be reissued in first quarter 2023. we're already in the process of completing the metallurgical test work. Current recoveries are over 80%, and we expect that to increase further. We'll complete our BFS, the bankable feasibility study, over the next 12 months, and then look to commission fourth quarter 2025 or first quarter 2026. And that's it. That's the story. I've rushed through that whole story, but that is the story of Manuka Resources with our two geographical regions, our mining projects, gold and silver mining in Australia and New Zealand South Taranaki Bight project.
Yeah, thank you. Excellent presentation. We still have 7 minutes left for some questions. So for all the viewers out there, you can post questions through the Q&A function or the chat. And we already got some questions. So the first one is, having acquired TTR at a grossly undervalued prices, what are the new development plans on the asset, and how will this positively impact the earnings?
Great question. Great question. In my 35 years, I'm going to give my age away a little bit. In my 35 years of banking, trading, and mining, I've never come across a project which is such an opportunity as this. And the reason I say this is because it ticks 3 boxes. The first box it ticks is financial. So it's in the lowest cost quartile of all iron ore producers. Then when I look at the environmental footprint, it's one of the greenest, and it's certainly the lowest carbon emitter for all bulk producers globally. And then strategic, the third box I was looking to tick, it's going to produce 12 to 15% of a mineral which is a critical mineral in three localities in the USA, in the EU, and in Australia. Vanadium is deemed to be a critical mineral, and we're going to have 12 to 15%. So when you look at those three boxes, I guess any one of those 3 would make something an attractive project, and we're ticking all 3 of those boxes. And we're going to be mining. We already have a mining license, and we'll be mining at the rate of 5 million tonne a year for 20 years. So we expect to generate substantial revenues. I'm just going to quickly jump back to, I know this is a long way around in answering your question, Matthias, but I think it's actually quite an important question. Just jumping back to this slide number 19, which talks about revenues, which talks about, unit cost unit cost per ton, or our operating cost, annual operating costs. 5 million tons of iron ore at current pricing of just short of $90 means our operating revenues just from iron ore are going to be $450 million US per year. That's against the cost base of 100 million US. If I look at the vanadium payables that are likely to flow, and the lithium price this year is doubled by a factor of 6. The vanadium squeeze hasn't started yet. Market commentators are predicting the vanadium will double over the next, demand for vanadium will double over the next 5 years because of the vanadium flow battery. We saw this is the year that the squeeze took place in lithium. It's gone up by a factor of 6. Just taking the vanadium, its current spot price, which I believe is, we believe is well undervalued for where it will be in 5 years' time. It's going to still add, let's just say, at 50% recoveries, we won't get 100 cents in the dollar on the vanadium. We'll probably get 50% recoveries. And so we're going to be having another $200 million flowing through from the vanadium. It's quite likely we'll have revenues of $650 to $700 million a year based on current numbers against a cost base of 100 million, an operating cost base of $100 million. That's why I think it's such a fantastic story. Now, just in answer to your question, what are the developments? What are we going to do to now to start getting some shareholder appreciation of this, external shareholder appreciation of this opportunity and what we've secured? We're going to start talking about it to the market. We haven't been able to talk about it to the market. This is the first public presentation we've made. We haven't been able to talk about it to the market to date because we've needed our as a courtesy to our shareholders, to Manuka shareholders, we needed our shareholder approval, which only took place 21st of September. So last week. And at the same time, we needed the TTR shareholders. They have now voted in favor of this transaction as well. So we're going to start marketing this, telling the market about this. We've already started our BFS, and we're in the process of finalizing our marketing plan. I think those three factors are going to make a material difference. Very long answer. I do apologize.
No, excellent. I mean, it's an interesting story, and it's will hopefully create a lot of value, just as you said. So I think it was really important to go into depth here. So we have 3 minutes left, but there are just a couple of questions bound together. So
sure.
Maybe you can answer all of these. At which silver price will you start the silver production? And in Q1 2023, the gold production will start again, right? Also, how much money do you need in order to bring the STB project into production?
Right, let me start with the silver price first. So we look at the silver in Aussie dollar terms, not in US dollar terms, obviously, because we're located in Australia and that cost. Obviously, there's a link to the US dollar, but for us, what's most important is the Aussie silver price. Currently at $18.50 US per ounce, equates to about 28.50 Aussie. That's fine for our stockpile production, and you can see the stockpile just at the back here. Can you see my cursor running around this presentation? Yes. So that's the stockpile, that's the plant. You can see the proximity is fantastic. But if there's a mining cost associated, we need that higher. So we're looking for a silver price in US dollar terms around $27, $28. It's been there over the last 12 months, quite honestly. So it's not a long way away from that. We're ready with our mine plan. We've got mining contractors ready to go. But that's the price that we would like to see to give us a workable margin. You know, it was just in March of this year that we saw silver go from $36 per ounce, Aussie dollars per ounce, down to $26 over a 3-month period. We need to make sure we don't have that situation again where we don't have the chance to put in a profitable hedge. So, for a partial hedge for part of our production. So that answers the question as far as what price would I like to see. I'd like to see the silver price in US dollar terms closer to 28 to 30 US, which would equate to 40 Aussie. We're looking for 40 Aussie dollars per ounce of silver. Gold, we're bringing out a revised mine plan now, which, depending on the extent of our cutback, we need to open the pit a bit further from the top down. Gold production, we are planning Q1, Q2. I'm not at this stage, until I've got the final mine plan, I cannot commit that we will be mining gold Q1, Q2. We'll be still producing silver in Q1 of 2023. And then the third question that was asked, how much money do we need to start the project? Look, I believe this project is very reliant on one or two or even three strategic partners. I know I'm just about over, or I've got a few seconds left to answer this. We will have participation from 2 or 3 strategic partners because of the critical nature of the project. It's very likely that we're going to have a European, an American, and an Asian producer all looking to tie up with us going forward. We haven't planned a substantial we can see ourselves having to add some debt to the project in the next 2 to 3 years, but we don't see a material raise occurring in the short term.
All right. Yeah, and the time just is up. So thank you very much for the answers, and thank you for the great presentation.
Thank you, Matthias.